All right, so we are here today with the CEO of Marathon Digital Holdings, Fred Thiel. We're here at the Bitcoin Policy Summit put on by the Bitcoin Policy Institute, a think tank here in D.C. Thank you so much for joining us, Fred. We sincerely appreciate it. I wanted to start with actually something that you said in your interview earlier today with Senator Lummis. You said something that you said energy or Bitcoin mining can be productive and not parasitic. Could you expand a little bit on that if you don't mind?
Sure. So Bitcoin mining in and of itself does something very efficiently, which is produce heat. And 50% of industrial energy spend is spent to heat things. And so imagine if you could capture the heat from Bitcoin miners, and Bitcoin miners could get paid for that, that would subsidize their cost of electricity. If you, on top of that, take things like biomass, stranded methane, other forms of energy or matter, which otherwise need to be mitigated and dealt with. So, for example, you look at a large ethanol producer, they have all sorts of waste product after the methanol has been produced that they need to get rid of, and they pay people to take care of that. Imagine you could do that on site, turn it into energy, turn the energy into heat. You need the heat for the methanol production process anyway. And the way you're doing that is simply mining Bitcoin. That's how we believe that Bitcoin can be extremely productive within the economic environment, especially in mitigating what are otherwise toxic things for the environment, but at the same time eliminating the need to use grid energy for things like heating. You could heat buildings, you can heat homes. We are heating greenhouses, we will be heating shrimp farms. All sorts of things you can do with heat being the byproduct of Bitcoin mining. And in doing all of that, you essentially eliminate the parasitic nature of Bitcoin mining as being this thing that just consumes energy.
Yeah, no, I appreciate that. And I think you also just ran a test or pilot program where you actually used, I think it was methane or waste gas from landfills to actually power the Bitcoin mining. Could you tell us a little bit about that?
Yes, that's a site in Utah that we did it as a pilot, very small scale, but it was a proof of concept that showed that you could successfully mine Bitcoin using landfill methane gas. If you think about what types of methane you can get, landfill gas is a little challenging because depending on the temperature and the climate, the quality of the gas changes. If it's hot out, you get a certain type of gas. If it's cool out, the gas is a different mixed nature. The type of methane you get from biomass is better because you're getting essentially a waste product from an industrial process that ideally is very consistent. So then you can tune the anaerobic digesters and all that to optimize for that. So mining on landfills is very hard, but we were able to prove that you could do it quite successfully. And we're now having conversations in the developing world, actually, where there are huge landfills to essentially be able to set up shop next to those sites and generate electricity and mine Bitcoin.
Amazing. Very, very cool. So as I mentioned, we're here at the Policy Summit. So we're here talking about what regulation in the U.S. is going to look like. You spoke with Senator Lummis earlier. Let's start, or let's just try to jump in on a positive side of things. What are regulators getting right in the United States right now? What has you sort of optimistic about the regulatory approach for the time being?
Well, I think the fact that the Bitcoin ETFs were approved after quite a lot of issues is a step in the right direction. Now, some people argue that they were only approved because they had to be approved because of the cases that had been brought in front of judges. And so we'll see how that bodes for other cryptocurrencies like Ethereum and others that'll have to go through a similar process. But the fact of the matter is that between the FASB rule change, which allows companies to carry essentially Bitcoin on their balance sheet and market to market, and the ETFs, it's a quasi-stamp of approval from regulators that institutions can now play in the asset class. And so we're clearly starting to see that. And there are many alternative ways institutions can play. They can buy equities in companies like ourselves. They can buy spot Bitcoin. They can invest in, any number of different ways today. So that is now, we're making good progress there. The energy narrative in certain states, I think we have developed a good understanding with the utility operators of the good aspects of having Bitcoin in a grid, how it helps balance the grid. It means you don't need to use as many peaker plants, which are fossil fuel plants by definition. It also means the utilities don't have to invest in battery technology. because Bitcoin miners will come in and do all the CapEx and the mining. And if you think about battery technology, you're essentially generating energy, storing it in a battery, and then offloading the energy off the battery when you need it. Well, Bitcoin miners are consuming energy from the grid, so they're paying the utility for that energy, so the utility has a revenue stream. Yep. And more importantly, we can shed load or curtail whenever it needs it, and then they get the energy back. So the benefit to the utilities is that they don't have to invest in batteries. They don't have to pay themselves to put the energy into batteries, because they're getting paid by us to consume the energy. And so there are a lot of benefits there. The one area where I think we still have a lot of work to do is just around Bitcoin and financial independence and people being able to have self-sovereignty and have wallets that are not central wallets on exchanges.
Yeah.
I think that's the next big step there. But again, Bitcoin has clearly bifurcated itself from the overall crypto narrative, which is the best thing at this point.
Okay. Yeah, that's important to note. One of the things that will now become a part of the equation when it comes to regulation is the idea that side chains will now sort of create a situation where Bitcoin will need to be pegged in and out. So you have a situation like Anduro and merge mining where now it could potentially invite more financial regulation. What are your thoughts about that? What will this new idea of maybe Bitcoin L2s that require pegging in and out, what will that mean for a company like Marathon?
Well, I think the way to look at it is a little bit like the way the internet was built.
Okay.
TCP/IP was a protocol that was developed by essentially DARPA. It was an extension of DARPANET, but Vince Cerf and some professors at UCLA built the first kind of set of routers and connected that. Only thing that allowed you to do was connect computers to each other. Mm-hmm. And then the layer 2 there was HTTP as a protocol that allowed you to build websites, SMTP, Simple Mail Transport Protocol, which lets you do email. And you look at all the businesses that have been built at layer 3 in the internet, yep. Facebook, Salesforce, et cetera. Those are the businesses where a regulator would start to get involved.
Okay.
Right? So if you do stock trading on the internet, then it's at the application layer. Mm-hmm. It's not down at the protocol layer. And so we built Anduro and contributed the technology to Anduro together with others as a way for people to be able to build things. So think of it as HTTP or an SMTP, effectively. It's a protocol and an ability to build things so that you're pegging them on the Bitcoin blockchain from a security perspective. Mm. So it's simply a piece of additional plumbing.
Okay.
So if you are in the e-commerce business and you want to charge people using credit cards, you would typically use a protocol by Twilio. It's a piece of plumbing.
Got it.
That's the same thing. Anduro is a piece of plumbing.
Okay. Do you feel that most people who make policy understand these dynamics? You're describing them in a very sort of easy to digest way. Do you feel that this message is now getting across to policymakers and they're starting to sort of understand that we do have a bit of a precursor to this with the internet, something similar to Bitcoin, or is this still a message that you're really trying to kind of share with people?
It's a great question. I think that it's all a question of how you frame it.
Okay.
So context is critical in everything.
Yep.
And so if you think of collectibles, right, baseball cards inarguably are private property that people are allowed to trade. The regulators don't have anything to say on it. Yeah. But what happens if you tokenize a baseball card? Now all of a sudden, okay, you've tokenized it. Are you going to sell fractional shares in that? Are you now selling securities? What are you doing? And so it's not the asset itself or the underlying technology, but it's the manifestation of those two things in an application.
Okay.
That is where the regulators get involved. So, for example, there is no issue with sending money to people. It's only if you send money to the wrong actor that it becomes illegal. So the regulator gets involved. Right? Okay. It's like when you do anything in the securities world, it's really the application is where you run afoul of the regulator. So we're not concerned about the ability for side chains and applications being built on Bitcoin as having a negative impact on Bitcoin. We think it'll be up to those specific applications to justify their existence with the regulators and do all things that are needed to make them compliant.
Okay. Well, perfect. Any final thoughts? Anything you'd like to share? We have the halving coming up. Anything on your mind?
I think this is going to be a very interesting cycle for Bitcoin miners and just Bitcoin in general. This is a halving. We're going into a halving, post-ETF approval with a lot of demand for Bitcoin. The price of Bitcoin is at a very comfortable level for miners going into the halving. So there won't be the doom and gloom that you normally associate with halvings.
Yeah.
As the cost to mine will double. Yep. Right now, we're in one of the most arguably profitable periods in Bitcoin at the moment. And so everybody's very focused on mining as much as they can before the halving. But I think there'll be a small supply shock to Bitcoin, which should be very supportive of driving the price a little bit higher.
Okay.
And, everybody, I think, is very optimistic that we'll see new all-time highs and Bitcoin will continue to climb. The one little stat that I find quite amusing is that we are already at a point in the world where not every millionaire on this planet can own a Bitcoin.
Bitcoin, right? Yeah, that's interesting. Yeah, we have some interesting years ahead of us. Thank you so much for your time today, Fred. We sincerely appreciate it. All right.